We have some business news on the programme, why not? With us here in the studio, our business editor, Stephen Carroll. Stephen, you're starting with that rebound, aren't you, on the stock market, which seems to be gathering pace.
That's right. After Wall Street's worst week in 2 years last year, Monday was its best day in 3 years. Investors riding the roller coaster over Washington's moves on trade. Relief there that talks taking place with China calming those tensions between Beijing and Washington. The main Wall Street indices, as you can see, finishing up, or as you could see rather a moment ago, finishing up around 3% on Monday. Still lower than they were a week ago, though. This is how things are playing out across the Asian markets. Earlier in trading, we had the Nikkei in Tokyo up 2%. Really gains across the board in Asia as well. That's feeding into trading today in Europe too. The European markets also seeing sharp gains. The drug companies GlaxoSmithKline and Novartis among the gainers in Europe. That's after announcing the British firm would be buying out its share in its joint venture. Well, one company that's not sharing the bounce on the markets today is the fashion retailer H&M. Their shares down 3% at the open in Sweden. That's after their pre-tax profits fell by 60% in the first 3 months of the year compared to last year. The retailer's been hit by poor sales and also bigger discounting of its stock. Well, it has been a busy few days on the markets, but don't feel too sorry for those who've been busy trading the slump. New figures show that the bonuses being paid on Wall Street have jumped. In fact, it's the biggest pay rise in 4 years. The New York State Comptroller says the average bonus last year was over $184,000. That's up 17% on 2016, boosted by higher bank shares. They were helped by rising interest rates and also reduced regulation under President Trump. The total bonus pool for last year topping $31 billion. That's close to a record high, but still $184,000, not too bad for an average bonus anyway. Well, let's turn next to Facebook. Its share price took a pummeling on Monday after the Federal Trade Commission confirmed it was investigating the social network over the data harvesting scandal. If the consumer watchdog finds it has acted unfairly towards its users, the potential fine could run to billions or even trillions of dollars. Facebook is also facing inquiries from dozens of US states on top of pressure from European officials. Selena Sykes has more.
The firestorm surrounding Facebook continues. The US Federal Trade Commission publicly confirmed it's investigating the company's data collection practices, making it clear that punishment was on the table.
The FTC is firmly and fully committed to using all of its tools to protect the privacy of consumers.
It's not the first time the FTC has clashed with Facebook. In 2011, the tech firm agreed to settle charges that it deceived consumers when it came to their privacy, and pledged to ask for explicit approval from users before changing the way their data is handled. If the FTC finds this promise has been broken, Facebook could face a $40,000 fine per violation, which could add up to billions or even trillions. The tech firm also faces questions from 37 state legal authorities, demanding in a letter addressed to Mark Zuckerberg an explanation for its role in the Cambridge Analytica data leak scandal. Across the Atlantic, Germany's Justice Department called for tighter regulation.
Promises aren't enough. We will need to monitor companies such as Facebook much more strictly in the future, and also punish breaches of data protection strongly, swiftly, and painfully.
Facebook has lost more than $70 billion in market value over 2 weeks. It's promising to do better and says it welcomes the opportunity to answer the FTC's questions.
Well, meanwhile, there's a different data scandal brewing in India. The leader of the opposition there, Rahul Gandhi, has claimed that Prime Minister Narendra Modi's smartphone app is storing Indians' private information on servers in the United States. He tweeted this to draw attention to the story and, of course, to criticise Prime Minister Narendra Modi. Now, his party has defended the app, saying the data, including email addresses, was only stored for analytics. But the developers actually changed the terms of service of the app last week after the story first broke to say that information may be processed by third-party services. Experts say that India's legal protections in this area are particularly weak. That'll be another story to watch. Well, finally from me, Ford has joined forces with the Chinese e-commerce giant Alibaba to make a vending machine that sells cars. The machine in the city of Guangzhou is 5 stories tall. It contains 42 cars in all. And you can buy car on it if you were a user of Alibaba's Tmall online shopping site. You have to have a good credit score, but you can use a smartphone app to buy a car. It only takes 10 minutes. You don't speak to anyone. Buyers have 3 days to test drive the car before they have to commit to the purchase. My question about this is, you know the way things get stuck in vending machines?
Yeah,
what happens if a car is left hanging kind of 3 stories up and you've paid your however many thousands to buy it?
I saw your headline and I just imagined, you know, popping in a couple of euros and then the car drops down sort of into the bottom of the machine. Wouldn't work, would it? OK, interesting. Thank you very much, Stephen. Idea, of course, from China.